Welcome back. We'll start with a little M&A, of which there's been precious little of late. The sale of Telcom SwiftNet Towers business for almost 7 billion rand. Some nice change to tackle that interest-bearing debt of almost 12 billion.
But how, whoever is acquiring these towers, how are they going to run them? I mean, we don't have electricity.
Generators, batteries.
We're stealing those.
Well, there's that problem.
Which may be why they're only being sold for, what, 6.75 billion rand rather than 13 billion rand that they wanted to unbundle them at a few
but Standard Bank had a valuation of about 5 or 5.5 billion.
This valuation keeps going down. Maybe it's worth nothing.
Well, now they got 6.75 billion from it, so they're happy. Market cap's half of that. Of course, debt is double that too.
Well, kudos to, the CEO who did this deal for Telcom, because they now have cash to use elsewhere, but RIP to whoever bought them.
Yeah, look, in a better deal than an unbundling because they get the cash.
Yeah.
So
RIP being Actis and the Royal Bafokeng Holdings Group.
Yeah.
Actis is very, they've been doing, the buying and of towers, not just here in South Africa, but across Africa. So they know the business. But the problem is a South Africa specific one. It's not about your expertise of how well you know how to run this business of towers and how to, structure some amazing funding for yourself. No, it's about electricity.
Yeah. Towers are a nice business, but they need power.
Yeah.
Yeah, and we don't have power. Yes. Speaking of debt, not so much power, the interest bill on borrowings has come back to bite corporate South Africa in a big way, and companies must really be wishing we didn't have a hawk at the helm of the Reserve Bank. Take Remgo's dark fibre Africa Telcom's business.
We don't want to put the blame on just the macroeconomic environment. I think on the Heineken side, there were certain things on the restructuring side, certain own goals that were scored, so we must take full responsibility for some of those things. On the beer side, the wrong decision taking. So clearly, I think we can't just blame anything else on the macro environment, but clearly it had a role to play. For instance, at CIVH, our fibre company, I mean, the increase in interest rate had a significant impact on the earnings with the amount of debt sitting there, so that had an influence.
Own goals. Pete Flint tweeted this week that the compound annual growth rate of the NAV, net asset value of Remgo, since 2010 is 5%, which is money in the bank. The management has done nothing. So hence that 50% discount to NAV is because the market is saying, what management?
Exactly. And they've been taking their fair share of head office fees.
Although they will tell you that they're much lower than an asset management fee.
I don't care if they're not an asset management company, number one. Well, I used to be, so I'm glad we got rid of most of our.
There was a time when Remgro was a great asset and your discount was like 15%, and if it widened to 20%, you bought because it would close and everything was lovely.
Yeah, look, we are far beyond that, unfortunately. There's too many problems inside those portfolios, as you've seen. I mean, 40%, that's probably the beginning. And if our own structural problems in South Africa, still stick around and they're not going anywhere, it's going to be very hard for these SA Inc. type stocks and businesses to operate. It keeps getting harder. And it's not stopping. Nothing is changing.
I mean, I also get the feeling, and we've spoken about it for months now, is you almost get the feeling that corporate South Africa thought that interest rates might come down sooner than they have. Because, as you said last week, was it with Growth Point? You're seeing so many businesses that have debt, or there's debt within structures within the business, are really hurting. And I think maybe we didn't expect, perhaps naively, interest rates to go up as much as they did, or to stay as high as they have for as long as they have.
Look, that's a hard bet for any management to make. But at the end of the day, how management run their businesses is like how I said it at the beginning, it's with optimism. And you would think, yes, we're at the tail end of this hiking cycle, and you're positive and you tell your board of directors, let's be hopeful. But I don't know, man. South Africa, I mean, now, like you said last week, no M&A is happening because of
the ideologues of the Competition Commission.
Well, I didn't want to use those words, but
I don't mind.
I knew you would help me, put it succinctly. So there you go. So there's another issue. There's another barrier for you. So if you're a company outside of South Africa and looking at these good assets that Remgro has, you can't come in and just, with your cash and try to be part of that, because your M&A is going to take 5 years.
Mm.
Yeah.
But it's not all bad news out there. Just look at Sun International, whose Sun City asset has just produced its best ever earnings. Here's Anthony Leeming on why also they had to do the Piermont deal.
For us, it's a scale benefit. We get a little bigger. We don't see there's too much overlap from a competition perspective, so we're pretty sure the deal will be approved. But really scaling up, we understand the market's mature, but they've got the online database, which we, I think, can leverage very well with our SunBet. There's certainly some synergies in terms of CapEx and procurement. And I think, we'll learn from them, they'll learn from us, and together it'll be a very, very good, compelling group with some great big operations and fantastic cash flows.
Yeah, I've been in Joburg long enough, to see the ebbs and flows of, the popularity of Hartbeespoort and Sun City. So they're currently on fire. Every golfer, hiker, empty beer, you name it. They always, finding time to go to Sun City. It's always packed. I mean, look at the TikToks. It's amazing. And obviously the adults do go gambling every once in a while, and the kids, while the kids play with water. And it's amazing. It still doesn't make sense because I'm from Durban. We have the beach.
But the water's free.
You don't really have the beach anymore.
No. Remember when I grew up, it still doesn't make sense.
But
even when I'm here, it's still like, why would I go to Harties?
HEP's up 88% and stock down. I mean, the market is saying, nice. I mean, great set of results. Make no mistake about it. The SunBet, etc. But I think the market is saying, okay, so next year, like where you're growing from, what's your growth next year? And that seemed to be spooking the market because the consumer's under pressure. Yes, international tourists are almost back at pre-pandemic levels, but it's not like we're out there as a country selling ourselves. Chris Gilmore will always say we constantly fail at selling ourselves as one of the best destinations in the world.
But so is America and many other destination countries, but they seem to be doing fine. So I think we'll be fine on that.
Is Piermont not also the future growth, part of the future growth strategy?
At the right price, for sure.
At the right price.
At the right price, for sure.
Is this, and my sense is that mergers are never at the right price, or takeovers and...
Look at on the operational side how Anthony Leeming and his team, they've done exceptionally well. So you have to give it to them. I mean, Mr. Market is what it is, and if they're thinking or worrying about the future, they have, they can't do much about that.
But I remember
we have to commend a good management team.
I chatted with the CEO, and the name escapes me, during lockdown, and he said it was quite simple. They had nothing else to do. They got the Excel spreadsheet of expenses and went literally line by line.
Old school.
And they are a markedly better business as a result. Make no mistake about that.
So I like that.
Yeah, old school, as you said. Then there was Stadio, where student numbers are growing a respectable 10%. Headline earnings at double that. Here's CEO Chris Foster on the numbers.
Our first target now is to get to that 56,000 students that we've promised in our pre-listing statement. We said that we will get there by end of 2026. Looking at our current student numbers, this is really achievable. To get there, we only need to grow by 6% per annum. And as I've already indicated, we show constant growth of anything between 9 to 11% annually. So definitely achievable. Our strategy is really to build a comprehensive institution.
I got to say, it was good numbers, and yes, we can fudge when they were hitting their targets. But remote tertiary education. Every year we see the universities. There's just more people than their space. They're in the right space, and doing well from it. And we'll get Advertech on Monday. Of course, also got tertiary.
Yeah, right space and right brands, and that diversification of brands, not just focusing on professional studies, but also culinary and all the other. The arts. I like a diversified portfolio. You can tell, right? and
also the failure of one of your main competitors in UNISA.
It does help, a lot. But they're pricier than UNISA, so you have to save more as a parent. You have to go out, get funding at Standard Bank,
Yeah, but you're going to do that for your kids if they're going to get a degree that's respectable.
Yes. So I like Stadio, above 6 rand. I like Stadio above 7 rand. I'd like to see Stadio get to 10 rand. Come on.
Okay. I hold Advertech, so I'm less excited for them. I want Advertech to get to 30 rand.
And then there's Discovery. The bank's going great, says Adrian. Vitality's on a roll, and if only we didn't have NHI hanging over our heads like a bad smell in the elevator.
Bank had an absolutely brilliant look. The bank execution and rollout has been really, really impressive for the last number of years. It has reached an operational break-even, an important milestone. The actual quality of the services, how people are engaging with the bank, has been tremendous. So we're seeing continued growth. We're seeing just increasing usage of the bank, and we think we'll get to break even, a proper profit figure during this calendar year. So we are very impressed with the bank. It's been a remarkable performance.
It was, and they got an interim dividend for the first time since the pandemic, and the market said thanks, but no. We need David here to. This thing is so complicated.
I don't know. It's still the old businesses, like Discovery Health, that's doing very well. The insurance businesses, and obviously the bank is coming to the party. But remember, they had massive, big hurdles to cross over, and promises that they gave us when the bank was, and they overspent on the bank while doing all of these over promising. So they got their work cut out for them, and also I'm surprised he's no longer bullish on NHI. He was very bullish and saying he was cooperating with the government and they're working to make sure that it's going to get. NHI doesn't make sense. Just leave that chat. Just exit that.
Well, it would be nice to if government also decided to exit the WhatsApp group on NHI, but they seem resolute in sticking to what is a terrible plan.
It's fine. It's a terrible plan. They don't have money to fund it anyway, so they can talk about it all they like.
And it's not going to get through the.
Don't entertain them.
Lastly, while futures closeout was a little more like it this week, over 40 billion traded, and this despite the morgue-like status of the stock exchange, there's money to be made, apparently.
The reason that our revenue was above expectations was that it was supported by diversification across the asset classes. So the equity downturn was counterbalanced by the bond, derivatives and commodities and forex markets, and then also by a number of other business units, such as our information services, which were up 20%, which were up 16%, our JSE investor services, which was up north of 20%. And these results were supported by very healthy cash generation, which was up by 13.6%. And this was all achieved off the back of the implementation of a strategy that we promised the market a couple of years ago.
And the flip side there, because we're out of time, they got 2 billion cash on hand, but they're the inverse, they're earning interest.
I'm impressed with the JSE, that, volumes are going down, but all the other businesses are finally coming to the party. Well done.
And finally, you'd think that periods of economic downturn with their soaring unemployment rates, plunging home prices and less money overall would be really bad for you. Well, apparently you should embrace every recession that comes your way, because a report from America's National Bureau of Economic Research has found that mortality rates among Americans dropped 0.5% for every 1% jump in an area's unemployment rate during the Great Recession. It also found the more unemployment in an area, the longer people lived, especially people older than 64 and those without a college degree. And as it turns out, the unlikely beneficiary of a recession is the environment, specifically cleaner air. Put into perspective, the economists found the Great Recession provided 1 in 25 55-year-olds with an extra year of life. In South Africa, I think this means that we will be living into our hundreds as a result.
No, this is the difference between science and scientism. This is science.
We can leave that there.
Okay. Thank you, Bright, for joining us on the show. Have a good evening and a great weekend.